Hi folks, Pat Gage here, and on these videos we're going to cover the mastermind calls, the commercial real estate mastermind calls that we hold bi-weekly. If you want to join these calls, there's a link right below me right here, and it's also in the description. We cover topics of buying properties. We cover topics of people who have bought in properties and show us our process, show us their numbers. Love to have you on these mastermind calls. So again, click on the link below and we'll see you there. Thanks much, folks.
I think my guest is on. Are you?
I'm ready.
On?
I'm ready. Can you hear me?
We can hear you and we can see you. How you doing today?
Doing great. Doing great.
Well, thank you very much. I hope did you calm down, take
yes,
a little drink of water and get yourself.
Kids ordered dinner, so I had to pick it up. That I realized that it was at 7:00, so I was going.
Oh my gosh! Well, I hope you don't pass out because you don't have any food.
No.
We'll try not to keep you too long. But listen, thank you very much for joining us. And as I was just kind of giving a short intro here, my doorbell's dinging away here. But basically, if you could just kind of give us a short intro of what you've been doing and kind of what we talked about earlier, and then we'll just kind of let the questions and the discussion go where it takes us, as if that's okay with you.
Definitely. That is perfectly fine. First of all, thank you for giving me this opportunity to connect with you and all the members of your meetup and all the podcast listeners. Good evening, everybody. My name is Sridhar Sannidhi. I'm an IT professional. I've been in the industry for almost 30 years, you can say, close to 30 years in the IT industry. I used to work in Wall Street. I worked there for 18 years in the Wall Street, and finally I got fed up with the commute to downtown New York City, and then relocated to Dallas 6 years back. So that's where I thought of doing something on the side, because when I was working in Wall Street, I was spending 4 hours in commute alone. After relocating to Dallas, I was saving that 4 hours. So when I was there in Wall Street, I wanted to do, and I tried several startups, and most of them kind of stopped at the incubation stage itself, because
they started and then they stumbled pretty quick, right?
Yeah, the ideas were superb for that time, but the time was not there and team was not there. So after relocating to Dallas, I had time, so I thought I should start something on the side. Like many other investors, my first cut is I should start building up the single family portfolio. That was my first step. And I tried for almost a year and a half to buy single family houses in a good neighborhoods. Since I relocated to Dallas, I don't know all the neighborhoods. So I was looking for the houses in the place where I am, in that suburb and all the next suburbs, which are obviously a little expensive now, suburbs.
Yeah.
So all these
a little above starter homes, right?
Yeah. Those are expensive. So everywhere I went, a lot of people were bidding on those houses. And in some cases, I had 20 people outbid me. So I was scared to put a lot of money into the house. Basically, I don't want to overpay for the house. So that is when I decided it's not worth pursuing single family. So I should go big and very big. So in that process, I started exploring commercial real estate. So I was attending multiple weekend webinars, meetups, and all that. I bumped into one mentor. So he kind of gave a outlook on multifamily. So that was my first introduction to multifamily. So in that one, obviously, I felt like maybe there's something, a sales pitch going on there. I don't want to believe 100%. So I went to Bigger Pockets and did some more research, and a lot of people were talking positive about this multifamily. Then I invested a couple of deals, and then I realized that there is some potential there in the multifamily. So I
So
joined
you
a
were a passive
mentorship
investor in a couple deals before you actually got into
mentoring
syndication,
program.
what you're doing now. Okay.
Yeah,
Okay.
so
Now, how
mentoring
long were
program.
you in single family? How long did you stay in single family?
I did not buy a single house in single family.
You just passed by it. You didn't, you thought about it, but okay, that's okay. Because I
No,
know
I
a lot of
did.
people on this call have started with single family, such as myself. We
Yeah.
started in single family and actually did it for several years, and then we woke up and kind of said, oh my God, this is a job, right?
Yep.
So you just bypassed it. Okay.
So I almost underwrote 100 single family homes. I could not buy a single one. Or maybe more than 100. So and then my journey started into multifamily, and it never stopped after that. 6 syndications I completed and invested in another 12 syndications passively. Those 6 syndications together, 1,650 doors. And those 12 passives are close to 4,300 doors.
Okay, so
together.
hang on. You dropped a gold nugget on the floor. Hang on one second here. And the syndications that you've done, 6 of them, that's how many doors?
1,650.
1,000 doors.
Yeah, 650, 1,650.
Oh my goodness. Now those are syndications that you're the GP on.
Yes, I'm the GP, lead GP.
Wow. Okay. 1,600 doors. And then you said you're LP on how many other doors?
4,300.
Goodness gracious. Okay. So you know a thing or two about real estate and apartments, basically, is what you're telling us, right?
Yep. Yeah, still learning.
A little bit. Now, when we were talking the other day, what surprised me, and I don't mean to discredit, but you told me that you've only been syndicating as a syndicator for 3 years.
Yes, that's correct.
Really?
That's
so
correct,
in 3 years, you got to be in 1,600 deals.
1,600 doors, yeah.
That is pretty focused, and you have a full-time job.
Yes.
So kind of walk us through that, because I've got some notes here about what you said did you do for your job, and obviously you tell it, but how do you do that? Because a lot of us have jobs on the call. How do you go from not even doing let's say real estate right into getting a team pulled together and do 1,600 units in a matter of 3 years?
Yeah, I follow strict principles, like very, very disciplined approach. In other words, so every day I keep extra 2 hours after office, right? After 9 to 5, right, typically 7:30 is my cutoff time. After 7:30, typically I don't do office work. So 2 hours buffer, I will keep it. From 7:30 to 9:30, I talk to investors, I talk to brokers and all that. From 9:30 onwards, I start underwriting deals, looking into and other things. And maybe around maybe hour and a half, I underwrite deals, and then I will after that another 1 hour, hour and a half, I review all the existing deals where I am part of. So every day. So from different deal, I have to check different things, right? So
Yes.
People trusted me, so I have to spend time on that. So that's my daily routine. So some days, if I don't underwrite on that full time, I spend it on the existing deals, and also on the weekends, considerable amount of time I spend on the existing deals.
Gotcha.
Thanks to COVID, I'm not traveling anywhere, so that gives me extra time to do all this.
I was just going to say, and that's one thing that struck me when we talked, is the discipline that you had, and you mentioned something that even during business hours, you don't even check the business email, right? Or I should say your personal email, which I thought was hard. I mean, that was kind of like, oh wow. But if you think about it, that does take your attention away during the day, and that's something that that kind of struck me. I'm like, oh wow, because I'll do that every now and then, and of course you get down that rabbit hole and you really can't get the attention that it needs, right? Yeah. I thought that was interesting. So it sounds like you got a pretty structured night, let's say, after your 9 to 5. Yep. Okay, interesting. I guess take me back to when you first started. How did you network? How did you get networking with people that new real estate or new, not single family, but the multifamilies? How did you take a course? Did you attend a mentor or something like that?
Yeah, I joined the mentorship program here in Dallas I'm part of Brad Sumrock, a personal mentoring group.
Okay. I've heard of him. Yes. Okay.
Yeah, so I joined that and I learned a little bit on that. The ecosystem is very good, so that gives me a big confidence that I can do this syndication easily. So I found a partner who has been doing smaller units until then. He was buying 20, 30 units. So I motivated him to go for 100 units so that I would join. I joined him.
How'd that conversation go? How did you say, okay, dude, I know you've been doing 20 units. Now I want you to go 100.
Yeah, I asked him what is that stopping you from going to big. Then said, yeah, we need to raise the funds. I said, okay, I will get the funds. Let's go for big.
So I'm taking it you're the, from that comment there, you're kind of the money person in this operation, let's say, for lack of a better word, right? So you're the fundraiser or the capital raiser in your deals.
That first one, he has a little maybe doubt or something like that. He was saying that, we need to raise the funds. Will you be able to pull it off? I said, no, I can. I have a good network of people who are interested in doing these kind of things. I can get money from them, and then we can go and buy bigger ones. So then we started pursuing. Within a couple of months, we got a 96 unit. We bought it for 3.25 million, and down payment was 1.25 million. So roughly $1 million I raised on that one. So okay. He raised zero.
And now is that in Dallas, in Texas?
It's in Wichita Falls, Texas. Yeah.
Okay. All right.
So it was a deep value add. There were 24 units down in that one. So that's that's another adventure for a newbie to take on.
Yeah. Now, do you typically go for those type of value adds like that I would consider a heavy lift, right?
Yep.
So is that your mode of apparatus is to go to the heavy lifts, or?
I'm looking for that, but I'm not finding the heavy lifts nowadays since the market is so good, right? People are grabbing them before it comes to market.
Yeah.
So you need to have a good channel to get those kind of deals.
Yeah, well, I guess Bruce and I were just talking about something like that, where it's actually going to dirt, and like what you're doing here is going new construction because the price difference is, why not, right? I mean, and we talked about that on the phone too. Interesting. Would you share with me that is why would you consider? I mean, I know, but kind of share with us, why would you be thinking new construction? Because you have a new construction project coming out here. And it's 306 units, pretty good sized project, right?
Yep.
You have to raise 17 million for this project, right? Why did you do that compared to not go with existing product?
So right now, the existing products are very, very expensive. One way I'm happy that all my products all my apartment complexes are priced up significantly. So when I sell it, all the investors will be very, very happy.
Yeah, exactly.
Yeah. So that kind of makes me think that, okay, if I have to buy a new property, I will end up paying the per door cost at a very high this thing, but the rents have not gone up that much in proportion to the price of the unit. So that kind of puts a lot of stress on the operators, right? So you have very thin margin, and then people's expectations are high. So if we show only 6% cash on cash, you won't find that many people for an existing B and C class. And the per door cost is for a B class is 130 plus nowadays in Dallas Fort Worth market. I was thinking whether I should pursue at that level or explore something else. Then another co-sponsor, she was looking in for new construction, and then she was asking me if I'm willing to join and then lead that effort. I said, yeah, why not? Let's go and get it. So we were able to find new construction 301. So luckily it is a approved project, so shovel ready.
Okay.
So we are doing the fundraise. It's a 506c accredited investor only offering, so that's why I could mention on this call.
No, that's okay. And that's okay. And I just wanted the overall premise of it. Let me back you up a second here. You said something about a 6% cash on cash. Is that typical of what you offer your investors, or was that just something that on that last deal, and that's why you looked at new construction?
So most of our deals are 10% plus cash on cash and 80% plus in 5 years. So
okay. And that's what I'm hearing around too. So I just wanted to clarify that a little bit as far as what you're seeing. Obviously, with 1,600 units, get a lot more experience than I do. So, okay. Okay.
So, but the new construction, year one, you may not find any distributions, right? So it's difficult to complete a building and then rent it out in 1 year. So in our case, this is a garden style apartment. So it has like 12 buildings in the plan. Even though it's 306, each one is roughly 24 or 26 units. So every month we will get one building. That's how we are planning. So for first clubhouse and the first building may be done within a year. So by 14th month onwards, we will have tenants in the building.
Distribution. Okay. So, now, are you still getting? You're obviously probably still getting people wanting to invest in it, right? Because obviously the returns are, fantastic, I'm sure. Okay, so so that's not a concern there.
Yeah, not a concern at all. So the $17 million raise very earlier you quoted is based on 35% down payment. So we spoke to a few lenders. They want to give more money. So which means that we need to raise less, maybe as of now, I think it could be a 14 million rise instead of 17. So 3 million less. So which means that the investors will get more.
That's true. That's true.
Yeah.
Okay. So now with that $14 million raise, is that all on your shoulders, or
it's a
the
four
other partners in the deal?
It's a four co-GPs. So all of us can rise together for 14 million. So obviously each one of us have different strengths, right? Some people can raise more, some people can raise less. So.
Okay. Awesome. Now, and also you said that you've been in Dallas, Texas, or the Texas market. Recently, you shifted over and we're now going to another state. And you obviously you're going more than 100 units again here. And you kind of, if you don't mind, kind of walk me through that, the discussion we had on the phone. And I thought it was very intriguing how you picked this state and why to go there as far as the economics of that state.
Sure. Out of all the markets right now, I think most of people know that the investor-friendly states are very limited. So within those limited set of states, again, the only few states are attracting new migrants based on the job growth or maybe weather conditions or some other factors, right? So we noticed Tennessee is one of them. So a lot of people are migrating to Tennessee. Obviously, Nashville, Tennessee is in the top list within the Tennessee market. We have been trying to get something in Nashville, Tennessee, but again, when there is so much migration into that city, the prices will swell, right? So we are challenged with getting the units at the right price. So we started looking at other Tennessee markets. What we noticed is when Texas thing is happening, right? When people are moving to Texas, they're not only moving to Dallas, they're moving to all the metros in Texas to a different degree. Okay. So that gave a little bit of confidence for us to go to Memphis. Obviously, I know Memphis is a very big logistics hub. FedEx is there.
Okay.
So at the time of COVID, the logistics are very crucial, and this COVID thing seems to be lingering around for a long time. So at least next couple of years, I think it will go on in some form or other, and people will
Doesn't seem to be ending as quickly as we like it to, is it?
Exactly. A lot of people tend to avoid going to shopping malls and all. They will still order online, right? So the logistics business will be strong, in my opinion, for next couple of years. So I thought
Okay.
Memphis is strong in logistics, so let me focus in Memphis. So we tried for another 400 unit property in a good neighborhood, very good neighborhood. And obviously we didn't get it based on the price. So somebody paid extra $1 million or so on that when they grabbed it. So then we were looking in for other properties in that area. So the one which we didn't get is we were going up to 120 plus a door. Still we didn't get it. So
Okay.
we found the current one in the one which we are pursuing for 90 plus a door. Okay, but the biggest thing attracted us is that they have a tax incentive program called pilot program. The taxes are subsidized to the greatest extent for that property. Typically for that property, taxes should be around 700 to 900,000 range, but
Okay.
we will only pay 110,000.
Oh, wow. So not only you're buying something of great magnitude at 90 a door,
Yeah.
you're also getting a tax credit that reduces your taxes down, my God, to 100,000.
Yep.
And did you say that how many units is this complex that you're doing this on?
It's a 400 plus unit. Yeah.
400 plus unit.
Yeah.
Wow.
So
Wow, that's incredible.
Yeah, not only that, the taxes are subsidized for next 16, 17 years up to 2038.
Oh my gosh, they're going to be that low for that long.
Yes.
Wow. And now is that 90 a door, I don't know what that area goes for currently. Is that because it's a value add, or is that just the price per door that it's going for?
It's in fact, it may be a little expensive in that vicinity because the current owner spent $17 million on that property. So we are
Before
still,
you,
yeah.
wow. So you're buying it a little bit below the $17 million. Is it in an opportunity zone or anything kind of like that, or?
No, it's nothing of that sort.
Okay. So it sounds like this may have been like maybe a little bit of a distressed, which is sorry for him, but good for you guys when you come in and.
No, it's not distressed. They bought the distressed one and they revamped it. Yeah.
Okay. So is the price per door in that area right around 90? Is that the going rate? Okay.
Yeah.
Okay. All right. Awesome. That's good. So now that one you're closing. So both of these you're going to be closing what, in the first, second quarter of this year?
The second quarter of this year. Yeah.
Okay. And share with the group, which I've already done a little bit. You told me what your goal was for 2021, and I had to sit back and say, okay, did you just say that? And I thought it was great. It's one of those big audacious, hairy goals. Share that, and also share what your 2-year goal is too with them. If you don't.
Sure. My goal is to acquire at least 1,000 units a year. So typically, last year we only acquired like 419 units. So
okay.
I didn't meet the 1,000 unit goal. So this year I thought I should hit 2,000.
But you got 416 units. Okay. Well, you got to get out of real estate. You didn't make it. Sorry. That's still good. Okay. My gosh. I mean, I'd be happy with that right away. Okay. Well, you set some real good goals. So that's awesome. So 1,000 units a year.
Yeah.
Wow.
That's a good. So this year I'm targeting to close 2,000 units because I didn't do much last year.
So you penalize yourself and say, okay, you got to make up for last year's, not doing too well.
Yep.
Oh my God. I guess the one question that comes to mind is obviously you have a full-time job.
Yep.
do you have a team that helps you do this? I mean, this is great that you're doing, this, divided work and stuff. But I mean, that's the first thing that comes to mind. Okay, man, how do I analyze that many deals? Because obviously you're trying to do 1,000 deals. You're probably looking at 2,000 OMs and analyzing. And again, correct me if I'm wrong, but is that what I'm getting? You're going through a lot more deals than that, right?
Yeah, so we do have full-time VAs who does the initial data entry piece. So that is the major chunk, right? So they skim through all the OMs and they enter the data. We have certain criteria so they can eliminate some of the OMs right away. If it doesn't, then they will enter into the data sheet. And every night we get 2 or 3 deals. So we quickly skim through the numbers, and we have certain criteria to screen the deal, like whether it is worth pursuing or not. So after that, if it passes that first round of tests, then we will start doing a little bit of research and then go for it. So in every deal, we see what is the uniqueness that we can get out of that deal and then go from there. So for this year, so far I'm doing good. So I closed 326 units in last month, and now 300 construction and then another 400 plus. So that puts me to 1,000. So I have to work for another 1,000.
You have to work for another 1,000, and it's only April. My gosh. One thing, you need to set your goals higher. I really hate to tell you that, but I'm just kidding. My God, that's awesome. So you have some VAs that do the initial screening. So they go to the websites. You have your criteria, A, B, and C, and D, and that's where you're getting the volume in. And then if they passes the A, B, and C, and D, that drops into your box, and then you start taking a look at from there. So you have a pre-screen, which I think that's awesome to do that. Now, did you set that up right away, or is that something you kind of said, wow, I have to work till 5 and I got to sleep somewhere in there, or is that something that you did right away?
No, this one, initially I was underwriting, just I want to learn myself, and then slowly once I started working on multiple things, my day is stretching. I felt that, I should put a stop to the number of hours. That's when I started hiring VAs. So I'm still in the process of hiring more. So my goal, at least maybe this year, I may touch 6 VAs or maybe 10.
Okay. Wow. Okay. Well, yeah, to get to 1,000 more units this year, my goodness, that's going to be a big, interesting. Okay.
What's VA, by the way?
Virtual assistant.
Virtual assistant. That's a good question. That's a good question. All right. Well, I'm going to stop asking questions. Hopefully the group will have some questions for you. If you don't mind, do you have anything else to add? Okay. Obviously, they don't want to hear me talk. They would love to hear you more talk. Does anybody have any questions? If you do, just kind of raise your hand or just speak up and we'll go from there.
So Pat, I do have a question.
Go right ahead, sir.
So this is Dharmendra. I just want to understand, what's your typical fee structure for the deals that you syndicate in terms of acquisition fee, disposition fee, asset management fees, and all these kinds of things?
Sure. So we don't have disposition fee in any of our deals.
Okay.
GP LP split is mostly flat. We don't have that waterfall structure. Anywhere from 15 to 20% range, depending on the deal. Okay, in some deals you may have a little room to make more money. Some deals we don't, right? Depending on your purchase price and various other variables. We see if the deal can hold up to 20%, we'll go with 20. Otherwise, we'll go for 15% GP cut. And asset management also anywhere from 1 to 2%. Okay. Acquisition fee typically 1 to 2%, depending on the deal.
Okay, thank you.
How did you get that kind of a tax abatement to $100,000 on a property that's got 400 units?
So that they have that pilot program to encourage all the businesses to provide housing in that vicinity. So otherwise the operators are not sitting in that vicinity. So they gave that incentive.
What a huge incentive.
So that's the city that does that, right? Is that
Yeah.
what you're saying? Okay.
Yeah.
Awesome. Awesome. Good question. Hartford, you had your hand raised. Go right ahead, sir.
Yes, sir. Yeah, forgive me if you may have answered this already, but how are you initially finding these deals that come in that you give to the VA?
So we have a subscription to multiple commercial real estate sites, and in addition to that, we have a relationship with multiple brokers, like business relationship with. So they keep sending us off-market deals, and we bet them at the early stage. So.
Okay, thanks.
So now, with that off market, or should the brokers, do they send them to you and then you send them to VAs, or they know
Yes.
to go? Okay. So they go. So the VAs aren't interacting with the brokers.
No.
Okay. All right. Okay. Awesome. Good
They
question.
may download the content from the website. Once we have the OM, then we say that go and check it out if they have other information such as financials and etc. etc.
Gotcha. Okay. Awesome. Thank you. Anybody else that got any questions? Speak up.
Hi, my name is Lorraine. I'd like to ask a question.
Go right ahead, ma'am.
Just wanted to ask a question about time management. Do you use a specific tool for that, or like how do you manage your time?
It's a Google Calendar. Google Calendar and Google Tasks. So there's a task manager in Google. So I use both. So,
Google
and,
Tasks.
yeah, tasks.google.com. I think that's what it is.
Okay.
Oh, when you go to calendar on the side, there will be a pencil button. Yeah.
Okay.
Yes.
Like fit in other things like meditation, things like that. Just some things that are keep you disciplined mentally for that.
So meditation, I started once and then I dropped it. I'm planning to do it again. Once I hire more people, I will have more time. So I will get back to that routine. Also, I use Asana. Asana is, if you're not familiar with it, it's a free version there. So I use the free versions in even my own task. I schedule them in that and make sure that I don't miss any of them.
Okay. So now explain what Asana is. I've used
It's a
it too.
project management tool. You can put your each project as each multifamily project as a project and see what tasks you need to do routinely and the date wise. Like, let's say every month I need to review the financials. I put that as a task to review the financials so that I don't miss that task. So even though it's a mundane task, oftentimes you will overlook it. So in my case, I want it to notify me that it's due. So anytime
Gotcha.
I see that red, it's due means, oh man, I'm running late on this one. So I wanted to see and then finish it off.
Gotcha. Now, does Asana go into your Google Calendar or does it just go into your email?
Asana goes to my email.
Okay.
Calendar, I did not integrate it yet. So those kind of small